Maura, back to you.
Okay, thank you there, Carrie. Well, that was a snapshot of today's trading action, but overall, Japanese equity markets have been among the hardest hit by the recent credit crunch and crisis of confidence. Since the start of the year, the Nikkei 225 is down about 7%. Our next guest remains bullish on Japan, though, and has a year-end target of 16,800 to 17,000 for the Nikkei. Derek Kowalczyk is Chief Investment Strategist at CFC Seymour. Derek, thank you for joining us here on CNBC's Cash Flow.
Thank you.
Given that Japan is one of the big underperformers in Asia this year, why are you still so bullish?
One of the reasons is that the underperformance has not been really justified fundamentally except on the currency level. And the yen obviously has been extremely strong in the third quarter of this year, is up 8% since the low point hit at the end of June. And we are strongly convinced that the Japanese currency will depreciate back over the remainder of this year by around 5%. And if this happens, the profitability of Japanese exporters will be enhanced to the point that the entire Japanese stock market should rebound fairly strongly.
Dark, it's Kari here in Tokyo. 5% depreciation in the yen. I guess you're targeting about 120 by year end. And dollar yen pretty much has moved in lockstep with the equity market here. Do you see that trend continuing?
I think it will continue. Historically speaking, there were times when the correlation between the value of the yen and the Nikkei, the negative correlation was very strong. Sometimes it was not, but this year it was exceptionally strong. And I believe that this will continue because of the emphasis that investors are putting on the profitability of Japanese exporters, and this is dependent so much on the value of the yen. For example, over the past 2.5 months, the yen has appreciated against the US dollar by 8%, and the Nikkei has declined by 13%. And I think that the strong correlation will continue. So if the yen moves up by 5%, I think we can see up to 8% gain in the Nikkei.
What about some of the obvious risks, like political risk? You're looking at Prime Minister Abe probably on his way out and facing a serious challenge in Parliament. And also, the valuation's still pretty high for some of these companies. How would you address those risks?
Well, obviously there are a lot of risks. The ones you have mentioned have weight on index levels, and there are also concerns over Japanese growth itself, because we had the contraction of GDP in the second quarter, and the consumer doesn't really have a chance to rebound much for the foreseeable future. That's why the Nikkei, the topics, will probably not rebound as much as they could as the yen declines. But still, the currency value is the predominant factor, and all the others are sort of in the background. So if the currency moves the way that we are forecasting, the other negatives, such as the politics and the high valuations, will be brushed aside by investors.
Derek, would you then be putting money into sort of the domestic demand plays in Japan? I mean, obviously, if the currency continues to appreciate, although you don't think by that much, would autos still be attracted to you? Which sectors look attractive?
Well, I think that most sectors will gain if we have an index rebound by 6 to 7%, which is our forecast. Let me point out two that I think could be even more attractive than the average at this point. The first would be the banking sector. It's down 25% so far this year, and also down by the same margin since the subprime mortgage problems in the US have emerged at the end of June. I think that it's beaten down too heavily, and both global banks and especially Japanese banks, which are not that exposed to the US market, should recover by the end of the year. And the second sector is machinery, which is down 17% since the end of June, and it's down partly because of the contraction in capital spending in the second quarter of this year in Japan. July numbers for core machinery orders were very strong, and I believe that they will continue to be solid for the remainder of this year. So the excessive depreciation of this sector, I think, makes it an attractive investment proposition.
All right, Derek, thanks so much then for joining us. That's Derek Kowalczyk, Chief Investment Strategist at CFC Seymour. We've got an SMS alert service on cash flow for you now. Find out where you can get the best trading opportunities from our analysts on our program and then have it sent directly to your mobile phone. To sign up, just key